Both China's imports and exports contracted unexpectedly in October, in yet another sign that the world's second-largest economy is losing momentum. An economist believes the situation will remain bleak in the short term. Chloe Feng reports.
For the first time in 2.5 years, China recorded negative growth in both imports and exports. According to customs data, exports declined by 0.3% year-on-year last month to $298 billion, a sharp contrast compared with the 5.7% growth in September. Imports also fell 0.7% to $213 billion, down from a 0.3% growth the previous month.
The weak export figure shows how much slower the global economy is at this point due to the interest rate hike in major Western economies. And we have seen that especially in the European and American market, the consumer demand has declined significantly. And that has posed a great pressure to China's exports.
Amid the bleak outlook, China still recorded a trade surplus of $85 billion, more or less the same as September. One believes weakening exports is only part of the country's problems.
The weak trade figure in China doesn't just reflect a weak demand from overseas, but a rather weak domestic market within China. And that would weigh down the recovery prospect for the world in 2023, because China's demand for commodities has been a driving force for many countries' exports.
The immediate priorities for the government, she said, are stabilizing the housing market and containing the COVID outbreak. Chloe Feng, HKIBC.